All right, let's talk Cognyte. That's ticker CGNT. They just put out some new earnings numbers, and, well, the stock absolutely took off. So what's going on here? We're going to get into the numbers, what management's saying, and really figure out what this all means for the stock going forward.
Okay, so let's just get right to it. The market absolutely loved this report. I mean, the stock popped over 10%. And, this wasn't just a, hey, that was a pretty good quarter kind of thing. No, this was a classic beat and raise. That's Wall Street speak for when a company not only beats expectations, but also tells everyone they're going to do even better in the future. It's a huge signal that this comeback story, it's for real.
So these are the numbers that got everybody so excited. Look at this. Revenue came in just over $100 million. A nice little beat. But the real story, the fireworks, that was on the bottom line. Their adjusted earnings per share, what the pros call non-GAAP EPS, it came in at 3 cents. Now that might not sound like a lot, but analysts were only expecting 1 cent. That's a triple. I mean, that's not just a beat, that's a blowout.
So the big question is, how did they do it? It's one thing to beat the numbers. Anyone can get lucky for a quarter. But how they did it? That's what tells you if this is a real trend or just a one-off. And for Cognyte, well, the secret is all about one specific and super profitable part of their business.
Okay, now this is where things get really, really interesting. Take a look at this chart. Their total revenue growth, a solid 13%. Nothing to sneeze at. But their software revenue, whoa, up almost 40%. And you've got to understand, this isn't just any old revenue. This is the good stuff, the high-margin, super profitable engine of the whole company. It's growing nearly 3 times faster than everything else. That's not just growth, that's acceleration.
And this is the magic of that software growth we were just talking about. It creates what we call operating leverage. Basically, more of every dollar they make in sales drops straight to the bottom line as pure profit. And you can see it right here. The proof is in the pudding. Gross margins expanded, their core profitability, EBITDA, soared 81% year over year. 81%. And the cash flow from operations literally doubled. This is what a well-oiled machine looks like. It's a masterclass in how to grow profitably. Okay, so the numbers are great. We get it. But numbers are just half the story, right? What's the narrative that management is pitching to investors? Because a good quarter is one thing, but a powerful story, that can fuel a stock for a long, long time. So let's see what they're saying.
So the CEO, Lodge Sharon, he got on the earnings call and he nailed it. He summed up their entire reason for existing in one single line. He said, the threat is unified. The data is not. Just let that sink in for a second. The bad guys, right? They work together, across borders, totally connected. But the good guys, they're often working with scattered pieces of a puzzle, data stuck in different systems. Cognyte's whole pitch is that they are the AI platform that connects all those dots, that bridges those gaps, so the good guys can actually fight back effectively.
And how are they going to do it? Well, their strategy is actually super straightforward, which I love. It's a simple 3-step plan. Step 1, go all in on their AI tech advantage. Step 2, keep pushing that shift to the high-margin software that's already juicing their profits. And Step 3, just keep a lid on costs. That's it. No fluff, no jargon, just a clear, smart plan for growing the business the right way.
And talk is cheap, but this is management putting their money where their mouth is. They didn't just have a good quarter, they raised their guidance for the entire year. They're bumping up their forecast for revenue, for profitability, for earnings per share, everything. To Wall Street, that's a massive vote of confidence. It's management saying, hey, this wasn't a fluke, this is the new normal.
Okay, so we've got a great quarter, a solid story, but what does it all mean if you're an investor or just thinking about becoming one? Let's zoom out a little and put all this into the bigger market context to see where Cognyte really stands.
Now, here's something you really need to get. This recent 10% jump, that's not where the story started. Even before that, Cognyte was a serious outperformer. Over the past year, it's beaten the S&P 500, sure, but look at this. It has absolutely smoked the rest of the software sector, which has been, frankly, pretty flat. This tells you investors have been catching on to this turnaround story for a while now.
So if we're looking ahead, what are the big things we need to keep an eye on? Well, there are a few key catalysts. First, can they keep this growth engine humming in the mid-teens? That's crucial. Second, they're sitting on a massive backlog, almost $600 million in booked business. How quickly can they actually deliver on that and turn it into recognized revenue? Third, there are some big U.S. government deals that got delayed. Will those finally close? And maybe the most exciting one, they have this new GenAI Copilot. Can they actually monetize that and turn it into a major new revenue stream? These are the questions we'll be asking.
All right, time to wrap this all up. We've seen the strong numbers, we've heard the story, we've looked at the market. So let's get to the bottom line. What's our take on the stock from here?
And this really is the big question, right? After a 10% jump, did we miss the boat? Is all the easy money gone? Or is this just the first leg of a much longer run?
So you've got two camps here. The bulls, the optimists, they'll tell you the AI story is solid, the business model is proven to be profitable, and that giant backlog gives you fantastic visibility. It's a clear path. But the bears, the skeptics, they'll push back. They'll say, hey, they're still not profitable on a GAAP basis. They'll point to the risks of government spending and messy geopolitics, and they'll argue that, hey, after this run-up, the cat's kind of out of the bag.
So, where do we land? Our call is outperform. Look, that explosive growth in high-margin software, that's not smoke and mirrors. It's the real deal, and we've seen it flow right down to the bottom line. When you have management stepping up and raising their forecast like this, it gives you confidence. Now, is it going to be a straight shot up? Probably not, but the execution here is just too strong to ignore. We think this turnaround has legs, and there's a clear path for the stock to work its way towards that average analyst price target of about $14.
The big question from here is pretty simple. Can Cognyte make the leap from being a great turnaround story to a durable, long-term AI growth company? That's what we'll all be watching for next quarter. And of course, as always, this is not financial advice.